Good afternoon, all the participants in our today's webinar, which is an initiative taken by the Institute under the leadership of President, Vice President, and my council colleague, Mr. Dhananjay Shukla, being the Chairman of the Corporate Law Committee. Friends, in this, today we have with us Mr. Balasubramanian K, who is Joint Secretary with the Department of Revenue. We also have Mr. Manish Bhia joining from Australia, who is an AML professional and a member of the Institute. And also my dear friend Anshul Jain from Bombay is again a regular speaker at our events. Friends, this initiative we have taken under the Master Knowledge Webinar Series EEE, which was launched at the National PCS Conference. And the webinar today, because till date we have already organized 12 webinars. This webinar today we thought to organize on a topic which is very critical. The way I feel that the knowledge and awareness we need to percolate and spread. We need to take these initiatives, and our members need to know much more about what is PMLA, how are we impacted by PMLA, because particularly by the 3rd May 2023 circular, immediately I remember my client calling me up on the next day after 3rd May, and then another circular came on 9th of May. So that certainly created some confusion as to how practicing professionals, particularly company secretaries in practice, the chartered accountants, the cost accountants are covered in the ambit, because they were covered under the ambit as the circular talked about, particularly the kind of transactions which they were handling for their clients with regard to buying, selling of immovable properties, managing their securities, other contributions which were being handled, even creation and operation of the companies. Now, this is our bread and butter. Any practicing company secretary, any practicing professional would certainly be creating a lot of entities, lot of companies, LLPs, buying trusts, selling of other business entities, which was one of the transactions which was covered in the 3rd May circular. As the reason of that, there was a requirement for the Ministry and the Department of Revenue to come out with a detailed guidelines and a framework under which the professionals, the practicing professionals, would do the compliances and would do the reporting. And when we talk about these, when we talk about PMLA, we all know that PMLA has been there for long. For the last almost 2 decades, PMLA by way of the statute was there. 2002 PMLA came into being. Now more than 2 decades, but by way of very many circulars, notifications, it has now, the importance has heightened and the significance has grown up manifold of the PMLA, and particularly the practicing professionals have been brought under the ambit of the reporting and the reporting entities. That's how, when we talk about this, we thought that this webinar we should do on guiding our members, particularly the practicing members, with regard to the regulatory framework under the PMLA, particularly the AML, which is anti-money laundering, and countering the financing of terrorism guidelines, which was introduced by the department, introduced by the ministry on 19th of June 2023. Now, these guidelines, friends, aim to provide a summary of legal provisions of any anti-money laundering, counter terrorism financing, and also deal with the financing legislations. Now, to deal with this, we have none other than Bala sir, as we call him, and he had a very busy schedule. Despite him being busy, he agreed to our request. Friends, your institute has already taken many initiatives in this regard, which I'll very briefly touch upon, and then we'll request Bala Subramaniam sir to please share his perspective as to what is the background with which these guidelines were introduced and the circulars was introduced, particularly bringing the professionals, the practicing professionals under the ambit. 1. 2, my request to sir would be to also share what is sir's expectation and what is ministry's expectations from practicing professionals, particularly the practicing company secretaries, because we are predominantly, all our members are doing creation of companies, the incorporation of companies, the incorporation of trusts, buying, selling these entities. Keeping this in mind, I would request Bala Subramaniam sir in a minute's time to share this perspective, but I am duty bound to share the initiatives taken by our President, Mr. Manish Gupta, and the entire council with regard to this, particularly the PMLA. Now, friends, we obviously sent emails time to time. Whenever the circulars was introduced, 31st May, we issued an advisory with regard to the Unlawful Activities Prevention Act under Section 51A. The implementation was introduced. Then on the same day, we also sent detailed information to our members with regard to WMD. Now, friends, honestly, candidly, since I am practicing in a different domain, yesterday we have had a pre-panel call, and my friend Anshul is expert in WMD. So Deepa madam said, sir, we will also cover, Anshulji will also cover WMD. And beg my, pardon my ignorance, honestly, because I'm not otherwise deal with WMD. PMLA, I'm dealing, ED and all, SFIO, we are dealing, so I'm aware of that. Somehow when Deepa madam said WMD will be dealt, I said WTD, we know. What is WMD? And I'm sure many of us need to be guided on what is WMD and how are we covered and what is the impact of WMD Act on it. And thanks to Dhananjay Bhai for giving me this opportunity to read bit of WMD. More of it would be dealt by Anshul Bhai. WMD, friends, is Weapons of Mass Destruction and Their Delivery Systems Prohibition of Unlawful Acts, which is there from 2005. But since we don't deal, many of us are ignorant of this. But now there is an impact of this act, which Anshul Bhai will cover. And your institute has already arranged a specific email ID on which information and the concerns with regard to PMLA can be shared, which is pmla@icsi.edu. We did a webinar where Honorable Mr. Ritvik Pandey, IAS Joint Secretary, also earlier joined from Ministry of Finance, and other officials did join. Friends, I have one request. After today's webinar, please log in and join our crash courses, which are being done by Mr. Suresh Pandey, Central Council member. Under his leadership, we are doing many crash courses and certificate courses. One of such crash courses where we'll request Bala Subramaniam to sir to take out time separately for gracing our webinar and along with our crash course also sometime, which we are doing and which we did one already on 31st of July to 4th of August. We have also done many seminars and released FAQs. This is a brief of what we have already done. Now, I would request our special guest for the day, which is Bala Subramaniam sir, who is the Joint Secretary in the Department of Revenue, Ministry of Finance. Sir is currently leading the Tax Policy Research Unit, which is called TPRU. And sir is a seasoned tax professional with over 22 years of experience carrying out studies on various topics of fiscal and tax policies. Sir has been leading many DOR policy papers and background papers on various tax policies. Sir has led many delegations of the government and ministry on various industry issues and advocated on key policy changes in the country. Prior to joining the government, Sir was the global head of tax in a large Indian multinational conglomerate which had business presence in over 65 countries. This is known to me today, sir. You are an inspiration, not only from the perspective that you are leading so many initiatives in the government, but also that for so many years you were in a private organization, and from there, the large Indian national conglomerate, in fact, initially private, and then you joined the national conglomerate organization, which had presence in 65 countries. Sir, we would really be enlightened by your address today. Would request you to please share your words of wisdom.
Thank you, Mr. Chawla, and thanks to the Institute for giving us the opportunity to present our perspective on the Prevention of Money Laundering Act. And thanks for your kind words, Mr. Chawla. I can tell you it's been a very enriching experience in the last 1.5 years with the government. And we are trying to make certain changes which are very important, both from the perspective of the revenues interest and also keeping in mind the ease of doing business, which is the mantra of this government, and we have been trying to live up to that expectation. And in that journey, I'm quite happy that I've had the support of my fellow professionals. I am a company secretary myself, although I'm not a member. I've cleared all the exams of company secretary. I'm a chartered accountant. I'm a member of the Institute of Chartered Accountants Institute. Um, but it's a very interesting time that we professionals are in this journey of this country's development. And as the Honorable Prime Minister has always mentioned time and again, that the professionals are the gatekeepers, in the truest sense, in terms of keeping the conscience of the business intact, and also ensuring that the right business is not put to undue hardship, right? So from that perspective, we will have to look at certain changes which have happened in the Prevention of Money Laundering Act and the rules, the related rules, which has, which you rightly pointed out, that it started off with the notification dated 3rd May, and also there's another notification dated 9th May. These two are, very relevant, and the guidelines which the FIU India, the Financial Intelligence Unit, which has come out with guidelines in the month of June, those are also very relevant in the context of our discussion. But why, suddenly a notification bringing the professionals into the PML ambit would be a question that has crossed many of your minds, and I think this has been raised in multiple forums. We have tried very hard to explain this, so I will spend a few minutes to explain the background, and also allay some of the fears that this is not something which is trying to pull you into the money laundering regulations. This is only, to justify and juxtapose the role of the professionals as gatekeepers, and our role as professionals start and end with record keeping, start and end with certain aspects which are provided in the maintenance of record rule, and it doesn't go any further, right? So now I'll explain why it is so also, in few minutes. Now, as a background, we must all know, and this is very important from the country's perspective, that India is currently going through what is called as mutual evaluation under the FATF framework, the Financial Action Task Force framework. Now, FATF is an international body, is an organization of many governments. It's called the Intergovernmental Organization. It has about 40 members, 39 members. And when we sign up to this particular organization, we sign up to the standard prescribed by this organization. So the standards are in the form of 40 recommendations, which FATF has time and again prescribed. And the effectiveness of these recommendations are evaluated in the form of 11 immediate outcomes, right? So, in our professional jargon, we are used to two concepts: test of design, test of detail. Anyone who has done risk and controls and SOX framework would understand test of design and test of detail. Test of design is nothing but whether your laws, regulation, processes, SOPs, guidelines, etc., are meeting the technical requirements which are prescribed by FATF in the 40 recommendations, right? What are those recommendations which are relevant for us? Are those recommendations which deal with client due diligence, which deal with retention of records with respect to client due diligence. It is with respect to how due diligence is done in certain circumstances. Due diligence in the case of politically exposed person. Due diligence in the case of high risk businesses, right? What is meant by high risk? I'll just cover in a minute. It also includes due diligence of clients coming from high-risk countries. For instance, North Korea, and Iran are in the blacklist of the FATF regime. So these are called high-risk countries. So if you get any investors, any clients who or their beneficial owner are there in these countries, then we need to conduct enhanced due diligence as per the FATF recommendations, and those have been incorporated into our PML rules. Now, why are these relevant as far as the professionals are concerned, right? So there is one recommendation called recommendation 22. So I would encourage all of you to go through these recommendations, because these are very relevant. Why? And how some of the requirements which have come in PML rules, PML maintenance of record rules 2005, where does it originate? It originates from some of these recommendations. So you must go through recommendation 10 to 19 out of the 40 recommendations which are there. These are available online. It's called FATF methodology. The latest one is of 2013. It is available in the website of FATF. So what are those relevant recommendations for the professionals? Are 10, recommendation 10 to recommendation 19. Then recommendation 22, 23, recommendation 26, 27, 28, right? These are, about 14 or 15 of them, which are relevant from the professional's point of view. Now, out of this, where does it originate for the professionals? It originates for the professionals from recommendation 22. Recommendation 22 talks about, any accountants or professionals who deal in about 5 activities. And these 5 activities are those activities which we have taken and put into the May 3rd notification. Those are buying and selling of real estate. It's about managing the client money, securities or other assets, management of bank savings or securities accounts, organization of contributions for the creation, operation, or management of companies, creation, operation, or management of companies, limited liability partnership or trust, and buying and selling of business activities. Now, so, if you look at R22 and 23, both are, applicable on the same transactions, but it pulls the accountants into this requirement of record maintenance. First is record creation, client due diligence being done, and maintenance of the record, right? Why are the professionals involved and brought into this? Because they prepare for or carry out these 5 transactions in the course of their business for a client, right? So I, as a company secretary, right, I may prepare or carry out a transaction related to creation of a company, right? That is our primary job, right? Buying and selling of business entities. So I will get involved in M&A transactions. So when a laundered money, right, is put into the system through companies which are created, and we as professionals, get into that transaction, and it is not that we are part of the transaction which is happening, but we may be aware of the transaction which is happening and the background of the transaction. So if there is a suspicion which would arise from this particular transaction, I as a gatekeeper, I as a conscience keeper is required the PML rules to come and report to an organization called FIU. It is as simple as that. There is no other role more than this particular aspect which is carved out for the professionals, right? We are not, it is not that we are self-incriminating ourselves. We are not, exposing our client, right? It is nothing to do with all of those aspects. All that we are doing is we are doing a very small function for the law enforcement agencies in terms of reporting a suspicion, not a real real aspect of an offense. We don't need to investigate. We are not investigators, right? As professionals, we are not investigators. All that we have to do is to form a suspicion. If there is a suspicion, then report that suspicion to FIU with relevant details. Now, for the professionals, we have designed a methodology where you don't need to come and report to FIU. If you report to the Institute of Company Secretaries in this case, if you report to the institute, then the institute will pass on your STR, the suspicious transaction report, to FIU, and then the legal process would start. Now, you will not be bothered after this, because after you have reported an STR, most of your responsibility ends there, right? If we need additional details, then FIU may reach out to you. Otherwise, your responsibility ends there. In fact, under law, you are not required. In fact, you are mandated to keep this STR that you have filed confidential. You are not supposed to tip off your client, right? Because it is only a suspicion. It may not be true. The FIU, the law enforcement agencies will take it from there, and they will do an analysis, a complete and thorough analysis, and come to a conclusion if there is an alleged offense or not, right? So it is not your job to get into investigation. It is not your job to do the function of a law enforcement agency. All that you are required to do under law is to look for those, alerts and suspicion, and report that suspicion if any. And if you feel it is a good enough circumstance to report that suspicion, you report it to FIU, right? So recommendation 22 is related to these activities which are performed by a professional on behalf of a client in the course of a business. Then these requirements of R10, which is CDD, which is client due diligence, R11, which is retention of records, R12 with respect to politically exposed person, then R17 would be applicable, which is reliance on third parties, R18 with respect to high risk countries, etc., would come into play, and you would be required to maintain these aspects and comply with these aspects. And these aspects, the recommendations that I just reeled out, those are all incorporated into your into our PML rules and the guidelines issued by FIU. So you don't need to look beyond these two documents. All that you have to look is the PML rules and the guidelines issued by FIU in June 2023. The background that I gave on FATF methodology is to give you an insight as to where it all is coming from. But you're not guided by the FATF methodology. FATF methodology is not the law of the land. It is just a guideline, and we have incorporated that into our law. Now, there is also one more notification of May 9, 2023, which also is relevant, right? It is to any person, right? It is talking about acting as a formation agent, acting as a director or secretary of a company, providing a registered office, business address or accommodation, acting as a trustee of an express trust, acting as a nominee shareholder for another person. But what I understand is, as a professional who isn't who is having a certificate of practice in the Institute of Company Secretaries, some of these activities, many of these activities are prohibited, right? Especially the financial transaction part of it is prohibited. So the wherever these activities are carried on by the professional, then they become reporting entities under PML rules, and they are required to comply with the requirements of PML rules and the guidelines issued by FIU. So this is a very basic introduction, and I thought this is the most important and fundamental aspect that we all need to keep, that our responsibility starts and ends with maintenance of records and reporting of suspicion, if any, to FIU. Then there is another requirement that Mr. Chawla also pointed out is on WMD, weapons of mass destruction. In fact, I will also add one more, which is UAPA, right? Unlawful Activities Prevention Act, right? These two are also very relevant, but these are not just for professionals. These are for any citizen of the country, right? So what is UAPA and WMD? When United Nations and our Ministry of External Affairs and Ministry of Home Affairs, they come out with list of designated individuals who are either involved in terrorist activities or who are in proliferation financing activities, right? Proliferation financing is for weapons of mass destruction. Now, when they are involved in these two activities, then there is a list which is published by United Nations, which is also incorporated in our domestic legislation, delegated legislation through a notification of Ministry of External Affairs and Ministry of Home Affairs. There are designated individuals like Dawood Ibrahim, like Hafid Saeed. These are individuals which are those in that list. Now, if any of those individuals come to us, it is unlikely that they will come to us, but God forbid they come to us for any professional advice, then we are supposed to deny taking client relationship with him, A. B, if there are any funds in under my control of that particular individual, I am supposed to freeze it and intimate the authorities as per the extant guidelines under UAPA and WMD Act. So this is a very simple requirement, and this is not a requirement which is specific to professionals. It becomes little more important for professionals because you are reporting entities under PMLR. So therefore, under the guidelines, you have been asked to comply with WMD Act and UAPA Act. But any citizen of this country is required to comply with these two acts. So it is not only specific to professionals. So a very simple requirement: there is a list of individuals, list of agencies, and list of entities which are part of what is called as designated list. And once those people are there in that designated list, we must have a mechanism to ensure that we don't conduct business with that particular individual or entity or agency. That is a very simple requirement under WMD Act and UAPA. So, what next in this journey? I'll just cover this in 2-3 minutes and I'll end it here, and I'll turn it over to the experts to take over the session. The mutual evaluation is going on. The on-site visit of the assessment team, you will be about this in a lot of press reports also. They will be here in the month of November to look at our effectiveness of the process. So in fact, we have put together a very, very formidable team from each of the agencies, which includes the Institute of Company Secretary. I'm very happy that the Institute Secretariat has been working very well with us in a coordinated manner. We have identified a couple of professionals also who are very thorough in their subject and experts. So they are to face the assessment team in November and present our views from the perspective of the professionals. As a company secretary, as a professional, they will be presenting how well we are regulated as a profession, how well we are prepared to handle the compliance requirements of PMLR and the guidelines which have been issued. So this effectiveness will be presented by the institute and by the professionals we have identified. So, hopefully, we would expect that our evaluation would be a successful evaluation, and we would meet the requirements of FATF, and the country would be rated very well on the PML requirements, the AML CFT requirements, as we call it. So that is the aspiration that we all have. We have been working very hard with all of the agencies, all of the components of reporting entities, banks, stockbrokers, and professionals like company secretaries and chartered accountants. And very happy that I got this opportunity to explain our perspective on this important legislation. And one last thing is, in the last few weeks and months, we have made many changes in PMLR, right? One change was done in May, another change was done in June. In fact, as of yesterday, we promulgated about 10 changes in PML rules. Very, very minor, very, very, I would say, cursory changes we have brought in only to take care of the mutual evaluation. So as professionals, we all should be updated with that. Of course, the guidelines issued by FIU is very comprehensive, and you should all follow that. And what I would request is, please be thorough with these requirements, because there is a lot of expectation from this professional community to help us in the national building process. And I would exhort all of you to work hand in hand in this journey. Thank you so much.
Thank you, sir, for your enriching experience which you have shared with us, and the way, the simple, in the simple, most simplistic manner, which one can share the entire background, the mindset. You have also done away with the fear, the apprehension which many professionals otherwise will have. You have also clarified the real intent, and also explained that it will be the intimation which will be given will be kept confidential. And in fact, I have personally learned so many things in addition to the motivation to read FATF and the recommendations. Myself, I'll certainly, that is promised from my side at least, I'll read, and then if given an opportunity, come again to your office and discuss the same in more detail. But certainly the SCR, as you have said, would be kept confidential. And the most important part are the two takeaways which I feel. One is the evaluation, which our evaluation is dependent on our professionals, the way they do away with they discharge their duty and they discharge their role. So the institute's evaluation would be done by the ministry on the basis how our members are performing, how they are discharging their duty, how they are complying with what reporting requirements they'll have to undergo. So my request again to our practicing members, all practicing professionals, to please read these recommendations, to please read the guidelines, to please report what is required. In fact, I was sharing with Anusha, who is briefing me from Institute on this webinar. I said, Bala Subramanian sir has very, very humbly and very clearly shared being a professional himself, and that's a great news, sir, to know that you are a company secretary. In fact, my hand-folded request, you please become our member. You are a member of the Chartered Accountancy Institute, it seems, but we'll separately contact our membership department. We'll request you to please, we'll send somebody and ensure, because you are becoming a member of the institute is an honor for us, sir, because you, despite clearing all the exams, you may not have taken the membership. We'll certainly see what is pending and what documentation is required. And then once you are a member, then we'll bother you more, because as a member, you are one amongst us. So therefore we take that right and bother you more than certainly. And my other request to the other panelists today would be to share this subject in more details as to what is expected of the professionals, what kind of reporting requirement is there. And for that, I'll request Manish ji. Thank you, Balasubramanian sir, again on behalf of the institute. I promise you that our institute will do whatever is required. And please, as a matter of right, as a member, as a senior, as our senior, please guide us. Please do our handholding whenever required. And whatever you feel you need to convey to us, frankly convey, and we'll be always available at your disposal to take whatever actions and to do whatever is required to be done. Thank you, sir.
Thank you so much. And I wish this webinar all success. Great.
Thank you. So nice of you, sir. So nice of you. Now I would request Mr. Manish Gia who is our first panelist in our today's webinar, Manish ji and Anshul ji. In fact, both of them are from Bombay. Manish ji, after working for many years in Mumbai, has shifted to Australia. But yesterday in our pre-panel call, I was telling him, sir, you are an Indian more than an Australian now, despite being a PR citizen there now. He said, obviously, yaar, itne saal mein raha in Mumbai, so therefore his family is also part of the family is here in Mumbai, so in India. And I got to know about Manishi yesterday. He's a wonderful orator. He's an expert of this subject. Manishi is one of the brave professionals, I would say. And why I'm calling him a brave professional? Because it's very difficult to leave everything here and then set up your own practice, set up your advisory firm in a different country, and that too being busy. He is extraordinarily busy because we are again bothering him for another webinar. So, friends, we have another webinar on 20th, which is today's 18th. Day after, we have another webinar, which is fortunately under the Committee of International Affairs Committee. Fortunately, I got the chance to lead that committee this year. I'm the chairman of International Affairs Committee of the Institute. We thought to spread awareness about opportunities for our members. At the end of this webinar, I'll share more about that. So Manish ji, friends, is a principal and founder of Compliance Advisors, which is an AML and CTF and financial crime compliance service provider based in Sydney. Manish ji is a certified anti-money laundering specialist from ACAMS. In fact, I would also request Manish ji to share what is ACAMS and whether our members can obtain some qualification or do some course from this organization sitting here in India, and for members abroad also, how can they take this certification which you have taken? Because as it is said in Gurbani, Manish ji, Vidya Vicharete Paropkare. The biggest paropkar is to spread knowledge, which you're already doing. But if you share bit of details about that, our members would be really benefited. Our first panelist, Mr. Ghia, is also a fellow member of both Governance Institute of Australia and our own institute, ICSI. He is also a bachelor's of law. Manish ji has more than 25 years of experience overall. And most importantly, friends, yesterday, after our pre-panel call, I went to the president and I said, I have had this pre-panel call, and for the next 3 days, I'll be found in Institute, because today also I'm taking this webinar from Institute. And president said, Kaise? I told him this was today was a pre-panel, yesterday was a pre-panel, today is the webinar, tomorrow is again pre-panel for 20th. And I said, today was Mr. Manish Ghia. He said he is very passionate about our institute, and fortunately he agreed to become the chairman of our overseas center in Australia. So friends, big round of applause for Manish ji for being the chairman of ICSI Overseas Center in Australia for this year. Thank you, Manish ji, for agreeing to chair the initiative of your own institute in Australia and spreading the wings there, ensuring that we together motivate our members to take up the opportunities available there, and also strongly put up ourselves as a professional community in Australia and globally. Manish ji, over to you to take this ahead. Sorry, Manish ji, you're on mute. Sorry, we missed you. We couldn't hear you.
Sorry, my mistake. Thank you very much, NPSG. Thank you very much for your kind words, and thank you very much for your good words. You know, आपने इतना बोला. Yeah, I'm very happy to share some of the insights in relation to AML. Just to get on with the subject, so I think Balasubramanian Saab has very beautifully explained the whole concept and what really needs to be done. Honestly, not much is left after that. But I will just touch upon few areas and give some insights. So he mentioned about those two circulars, and which is right. I think the second circular actually seems even more important to me than the first circular, because they specifically capture a lot of activities that the practicing professionals provide. So just talking about the FATF guidelines. So as he mentioned, this is all coming from FATF, which is an intergovernmental body. And there is a concept of trust and company service providers under the FATF guidelines, as well as the lawyers, accountants, and similar professionals. So both these circulars, the 3rd May circular is coming out from the lawyers, accountants related role, and the 9th May circular is coming out from the trust and company service providers role. Friends, you can read the FATF recommendations guidelines, which is about 40 as he mentioned, and recommendation 22 and 23 talks about this. So these activities fall under a label which is called as a designated non-financial business and professions. So under the PMLA, DNFPB is one of the kind of activities which is prescribed, which falls under the scope of the legislation. So if I put it very simplistically, the 3rd and 9th May circulars, they make the practicing company secretary a DNFPB. DNFPB is defined in the Act and in the rules. That in turn makes you a reporting entity. Once you become a reporting entity, then all the obligations which are prescribed, whether it is under the Act or the rules, or the ICSI guidelines specifically given for the professionals, they all apply to you in respect of covered services. Now, at least from my perspective, there is a key difference between the first circular of 3rd May and second circular of 9th May. The first circular talks about the 5 activities, which is and it says that the government notifies the financial transactions carried out by a relevant person, which is a company secretary, CA and ICWA, on behalf of his client in relation to these 5 activities. So I think the key word there is the financial transaction. So, and the next question in my mind would be, what if some of these activities are in the, they turn out to be non-financial transactions? But I leave that question there. I'm not very clear about it. But I think in the second circular of 9th May, if we will look at it, there is again a whole range of activities. So this is where I think a lot of non-financial, because this circular does not talk about any financial transaction, but rather it just talks about 5 activities. The only exception which is made is in the explanation C, which to me it appears to be the statutory declaration filed at the time of incorporating a company. So probably a company being incorporated is out of that circular. That is the due diligence done in relation to its incorporation certification. But everything else, you know, whether it is being a director or secretary of a company, providing an address to some company, arranging a nominee shareholder and things like that. So all these activities, so I think both put together would be the scope within which your activities will fall. And if it falls, you're supposed to get registered with the institute as a reporting entity. You will be a DNFPB, and hence you have to have a range of I would say compliances and frameworks which needs to be put in place, and which eventually the idea is that you are considering every activity, every transaction, every dealing that you make for your client, on behalf of your client, where you are dealing with third persons on behalf of your client. The idea is that you are conducting a due diligence, whether it is in the form of customer due diligence, or we will just talk in a bit about enhanced customer due diligence. There are beneficial owner checks, and there are sanctions which Balasubramanian Saab talked about under whether it is UAPA or WMD. So some of these due diligences that you will do to ensure that person who you are dealing with is genuine, these transactions are genuine. There doesn't seem to be some ulterior motive. There doesn't seem to be something which is you can't explain or they can't explain to you. And if that is the case, then there is a requirement to file a suspicious transaction report. So that's broadly the overall scope of this legislation is for the practicing professionals. Two other important points to keep in mind or the concepts, which is proceeds of crime and money laundering. Not directly relevant. This arises more when somebody has done wrong. There is a criminal offense. So proceeds of crime under the PMLA Act, if you'll see at the back of it, there is a range of scheduled offenses which are prescribed. And this would be under the criminal code. This would be under the SEBI regulations. For example, insider trading is a scheduled offense there, or offenses in relation to environmental crimes, wildlife trafficking, trafficking in human beings, and things like that. So if any money or any property is derived from these doing these offenses, then it becomes proceeds of crime, and dealing in proceeds of crime is what constitutes money laundering. So I think this is a broad framework of the PMLA and the scope of it. In terms of AML compliances, I'll just talk about some key compliances. So Balasam mentioned about the CDD. The other thing is some of the other compliances that, in my view, as reading PMLA rules as well as the ICSI guidelines together, that is maintaining, just ensure that you keep all your related paperwork, guidelines, frameworks in writing. This is extremely important because if there is an audit later on, if there is a requirement of review later on, or if, for example, even the under the FATF review, if the government as a sample selects somebody, paperwork is extremely important. All written policies and procedures should be in writing. Communicate your compliance framework to your staff as well as your client-facing staff, because it is not just you, but everybody who works with you should understand what we are trying to comply with and what is the requirements. I think one of the key things to also understand is that when how you really spot some of those suspicious transactions, what looks suspicious. Under the PMLA, even an attempted transaction is considered to be a reportable transaction. So if some client of yours, or he's a new client from somewhere overseas, let's say, and he talks to you about setting up a company, he will send some money, which all of this doesn't make sense to you, but he doesn't come back and he actually do all those things. That means there could be a situation where there was an attempt to set up a company, bring some money, and hence it could be an attempted case of potential money laundering. And if that happens, even that becomes a reportable transaction. So some of these things, that how do you really do due diligence? How do you really spot those things? It is best to put together a note on that, and everybody in your team should be aware of it. Provide risk awareness and training to staff on the PMLA legislation and the guidelines. Maintain records. We are required to maintain records for 5 years, as Secretary Saab shared with us. So this is all your client due diligences, all your policies, all your enhanced due diligence is done, any checks done, all those records needs to be maintained for 5 years. Sometimes you may get letters, sometimes you may get questions from the regulatory bodies or the law enforcement authorities, and that needs to be responded as well. Even that is a part of the PMLA legislations. So that's as far as the key reporting entity obligations are concerned. Some of the incomes of reporting, there are 2-3 key reportings. One is in relation to cash. If you have accepted cash of more than 10 lakhs and the transactions seems or accepted cash either in one transaction or in a series of interconnected transactions within a month and amounts to more than 10 lakh, that needs to be reported to FIU. But I would presume most, if not all, you don't accept cash, so probably that's not relevant. Similarly, any cash transaction done with a forced currency, it comes to your notice, that is supposed to be reported. Most importantly, it's a suspicious transaction, which is supposed to be reported within 7 days of suspicion arising. So when, just to clarify on that, so when there is a situation where you feel something is not right, you are doing your due diligences, you are making inquiries, or you are researching on that, and then you come to a conclusion that, okay, something is right or not right. And if you decide that something is not right, from that time, you are supposed to inform FIU through the institute within 7 days. In terms of quickly on the CDD, which is customer due diligence, this is required to be done at the time of commencing any relationship with a new client. And hence, you will have to, as far as your existing clients are concerned, probably you'll have to look at it, especially the active clients, and see if that needs to be completed for existing clients as well. There is a requirement to conduct a beneficial owner due diligence as well, which essentially means that for company and non-individual entities, who are, whether the beneficial owner is actually the person behind the transaction or it's the actual company. And if it is the beneficial owner who is interested, then his identity and verification needs to be done as well. In terms of further due diligence processes, now there could be situations where there are high risk transactions or high risk cases or from high risk jurisdiction. This all forms part of something called as a risk assessment in the AML parlance, which essentially means you look at all your different client types. You may deal with private companies, public companies, regulated entities, foreign companies, and you are thinking which kind of companies can pose bigger money laundering risks to me. You may provide various services, which is incorporation, whether it could be M&A, it could be insolvency, it could be due diligence, it could be legal advice. And again, what kind of services can pose bigger risks of money laundering? So likewise, you look at the customers, you look at what kind of services that you provide, you look at the countries they are coming from. So some countries are blacklisted or grey listed by FATF, which means that they do not have AML legislation or their AML legislation is weak. You may have read in the papers from time to time FATF grey listing and blacklisting other countries. If you have clients coming from those countries, that in my view, they are higher risk clients and hence requires a higher due diligence to satisfy yourself that what they are wanting you to do all is above board. Your delivery channels, again, I think by the nature of business of practicing company secretary, I don't think you would deal with a person on phone only or on the internet only. You will do face-to-face, but as a concept, if it is a face-to-face, it's a low-risk activity. If it is an online or a telephone activity where you can't see your client or you have not met the client, it automatically becomes a higher risk. So depends on what kind of client is he, what kind of jurisdiction is that, what kind of activity, what kind of service, what kind of how he's dealing with you. You arrive at the risk that is inherent in that particular customer dealing, and that will determine also your ongoing monitoring. So if you arrive at a conclusion that this makes it a client a high risk, then you have to do something called as the enhanced customer due diligence. And this means that look at the source of funds and wealth, do open source searches about the antecedents of the customer, look at any other way in which you can build and find out information about him. So the idea is that you're building a profile of the customer and trying to understand that the person is genuine and he is doing the right thing. So from that, risk assessment is what will guide you that what is a high risk activity for you, what is a medium risk, what is a low risk. And if it is a high risk activity, or it is from a high risk jurisdiction, or it is a PEP client, which is a politically exposed person, then you have to do an enhanced due diligence. And if the result of enhanced due diligence is something that you don't understand or you don't like, or you feel there is something wrong, then it can result in a SDR. So there is a CDD, customer due diligence. Then for certain clients, there is an enhanced due diligence procedures. As far as the suspicious transactions is concerned, a few key points to note. As I mentioned, it also includes attempted transactions. So not necessarily something which has actually been done, but if it was attempted and it was suspicious, you are required to report that. Essentially, in suspicious transaction, you are looking at unusual transactions, unjustified circumstances. If there is complexity where you can't feel that it is right, there is too much of complex corporate structure, all these things, the transaction is not matching with the profile of the client, or for example, the money seems to be going around in a manner which is not right, or the person wants to nominate people as directors and shareholders, which again doesn't match, or are some rank outsiders. All these things are grounds of suspicion. In my view, you know your business very well, and um, something will feel, if there is something wrong, most likely it will feel to you that something is not right, and it is a suspicious transaction. I mentioned to you about risk assessment. Just very quickly, I'll mention about sanctions. So as Mr. Balasubramanian mentioned, so there is a list of people which is published under the UAPA Act. These are United Nations Security Council resolution, and people declared as undesirable under that. It's generally terrorist organizations or other sanctioned countries. So the government publishes those and adds it to the UAPA. If you look at the back of UAPA, there is a whole range of organizations mentioned. And the new thing that was mentioned about weapons of mass destruction, and I'll leave Anshul to talk more about it. But quickly, these are the set of people who you are not expected to deal with. So you have to maintain those lists as well as track its updation on an ongoing basis, because they change from time to time, they update from time to time, and none of your client can be somebody from that list. If you get a match, God forbid ever, you are supposed to report that under the UAPA reporting process, as well as you are supposed to freeze the assets or money, if at all, in your control. So yeah, those were some of the things. I'll just quickly talk about some few challenges which I thought would be there. So caution about shell companies and undesirable entities. Look, the whole idea about the PMLA is that we do not have shell companies which are used for tax evasion, or they don't have an apparent activity but are used for money laundering and things like that. If you recall, there have been scandals like Pandora Papers and Panama Papers and Mossack Fonseca. These all actually incidents involved shell companies and companies which are used to do money laundering and tax evasions. So the idea is that be careful about such shell companies and companies which don't have an apparent reason but are being set up. And the nominee director and shareholders, as I mentioned, if they look out of normal, they are being somebody who should not be the persons who they are. There could be situations where you have situation where there could be inadequate due diligence because you can't find information, whether it is customer due diligence, it could be about politically exposed persons, beneficial on all that. Again, if you believe you can't find information fully, and the thing looks suspicious, always it is best to report. The cautious approach always is better to report. Over reporting is better than under reporting. There is a concept called transaction monitoring under the rules and the guidelines. So, which essentially means, especially for the clients with whom you have an ongoing relationship, whenever any transaction comes and or whenever any active dealing comes or you're providing services, you're always supposed to keep in mind the past history as well, and Steve, putting everything together, is there anything which does not make sense or gives rise to suspicion? So that is what is transaction monitoring at a basic level. Tipping off. So again, just reiterating the message that if you do find something suspicious, which you end up reporting, you are prohibited by the IML legislation not to tell the customer or even to tell anybody outside of your firm. there is that's a criminal offense, which is called as the tipping off offense. Last point I wanted to make was about privacy. So India is just starting to get, the new DPDP legislation has come, and rules are expected, and that would be something which will be implemented over next in the near future. And sometimes privacy legislation as well and the anti-money laundering legislation, they seem to be going in opposite direction. Anti-money laundering legislation requires you to get more and more information about the customer so that you can understand the customer's profile, his business activities, his transactions. And a lot of it is private information, or rather the personal information, under which is information as per the Privacy Act as well. This could be name, day, date of birth, address, and things like that. His Aadhaar number, his tax ID number, and so on and so forth. Whereas privacy legislation is trying to say that ask only limited information, what is required for the purpose, and keep it only for the period for which you have consent and is again necessary. So AML legislation requires you to hold the information for minimum 5 years. So assuming that the customer's dealing was one time and it happened and is over, but the AML legislation requires you to keep the information for 5 years, even though it may look like under the privacy legislation, you cannot keep the information for that long. So there is a bit of tension, and both needs to be respected, and in any given circumstance which is applicable needs to be determined. AML, definitely 5 years you have to keep the information, even if before that the customer comes and says, okay, you can't keep my information. But once 5 years is over, and if the customer doesn't want you to keep that information, doesn't give you consent, you have to be guided by that. So that's all from my side, some of those insights. Thank you very much.
Thank you, Manishji, for explaining the entire gamut of AML so well. And the one takeaway which I'll have is that over-reporting is better than under-reporting. That's very important for us as a professional, practicing professional. We need to.
Absolutely, sir. I think that is like your Suraksha Kavach, where if you have faintest of the doubt, it is better to report. Of course, you have to have reasons. You can't report on a whim. That is not correct as well. But act on caution to report rather than not report.
And also, thank you, Manishji, the way you shared about risk assessment, the STR, the transaction monitoring, tipping off, and the list of sanctions also. So you have covered the entire gamut. I think we'll have another interaction with you in some time when we'll start having the questions which we have already received from participants. And I'll be requesting you to share your view on the questions in some time. And before that, I would request, thank you, Manishji, for being here and sharing your initial remarks.
Thank you, NPG. Thank you.
Yeah. Thank you. We'll now have Mr. Anshul Jain to share his initial remarks on this subject, particularly WMD and the regulatory framework under the AML provisions. Mr. Anshul Jain is a fellow member of the Institute. He has 21 years of experience, although he doesn't look that old, but yes, he has it. And he has experience in corporate laws, SEBI matters, IPO, PMLA acquisitions. He has developed a strong competence in regulatory compliance, corporate finance, risk management. He's also been awarded as one of the top 10 chief compliance officers of the country by CEO Insight last year, 2022. He's also a part of the task force on corporate law formed by the Institute of Company Secretaries. He's also honorary consulting editor in the Corporate Law Advisor. Thank you, Anshulji, for being here and sparing your time and then sharing your words of wisdom. Go ahead, Anshulji.
Yeah, thank you, Mr. Chawla, and the way Mr. Bala and Mr. Manish spoken about PMLA. I think there is nothing left for me to speak on this. It was beautifully explained by both of them, and I think this is a learning for me So to learn the PMLA in such a simplistic manner, there is it was a very simple way they both of them have explained. So I'll just give some initial thought on PMLA, and then I'll jump onto the WMD requirements and all. First thing that we all should understand that PMLA is a journey. It's not a kind of a thing that today you think that everything will happen and tomorrow onwards you will start reporting and all. So the things, takes time to evolve and get time. It takes time to mature. Even the PMLA when initially came, and that time it was made mandatory for financial market intermediaries, banks, NBFCs and all. So it took some time to them to absorb the requirement and the reporting and everything. So similarly, whenever any new reporting entity comes into the system as far as PMLA is concerned, so it takes some time, and it's a journey which everybody have to live. Apart from this, the PMLA entire framework is basically divided into few areas. First is the screening. That is the very important area, as mentioned by Mr. Bala and Mr. Manish both, that you need to do the screening of your clients at the time of onboarding, and also the continuous screening you have to do, whether they are falling under the sanction list or not. And once you have done the screening, then the second stage comes to the risk rating. And I think Mr. Manish has talked a lot about the risk rating, which includes, and the third point comes to the due diligence of your client. So it may be the customer due diligence and the enhanced due diligence, depending on the risk rating, what you have given. So if it is a high risk customer, then definitely you have to do the enhanced due diligence of your customer. Then comes to the monitoring. Then you need to monitor on ongoing basis the transactions and everything, whatever is happening. And in case of any suspicious transaction you find, then reporting. It's not only the suspicious transaction, even the cash transactions are also required to be reported. But during this entire process, so this is on the client side what you need to do. But as an entity, as a practicing unit, or as a company secretary, as a professional, what all compliances you are supposed to do once you have become the reporting entity. So first is definitely you have to appoint a designated director and the principal officer. You have to frame a detailed policy for your AML program, which should include your client acceptance standards. It should include about the risk assessment, how you're going to carry. It should also talk about the monitoring process, that what all you will do. And accordingly, this should cover the entire AML program of the practicing unit. Then this policy, then of course you need to do the registration on the FIU India portal. And once the registration and everything is done, so you are set to do the compliances of compliances under the PMLA as a practicing unit. But the policy has to be periodically reviewed. That it should not be like that I have made the policy once and it is once for forever. So all your experiences or all regulatory framework, whatever the changes are happening in the regulatory side, should also be carried out from time to time in your policy. One very important aspect which was covered, that the communication of this particular policy and training related to this aspect has to be given to all your staff members, whether on site, off site, wherever it is. So they should be very well aware of all the whatever the AML program of the practicing unit. And then and then this should also talk about the maintenance of record. And this is the very critical aspect that you need to store all the KYC related information. And when I'm talking about KYC, it does not mean that you should collect the document that PAN and Aadhaar and all other ID proofs and address proof you've collected and your KYC is done. KYC is a broader term that you should know your customer in all the possible senses. So that is where the screening also comes into the picture, the background of the client, everything you should be aware of. The documentation is add on, but it is beyond documents. You need to do the KYC of your clients. And Once all this is done, then and apart from KYC, you need to also maintain you need to keep all the transactional records which are there with you with respect to providing your services to the clients. So all these are the minimum requirement. Once the internal all this policy and everything is set, and during the course of the business, if you find that there is a cash transaction or its cash transaction or its equivalent in value more than 10 lakh rupees, including foreign currency, all series of cash transaction integrally connected to each other with an aggregate exceeding 10 lakh rupees, again including foreign currency, all transaction involving receipt of non-profit organization greater than 10 lakh, including again foreign currency, cash transactions, including involving counterfeit currency notes, all cross-border wire transfers of 5 lakhs and above, and all purchase and sale of immovable property of 50 lakhs and above. If you think that there is such kind of transactions are carried out, this is required to be reported within 15 days of the following month. So once the month is over, within the next 15 days, you need to report. And any suspicious transaction, whether it is made in cash or not, is also required to be reported within 7 days from the identification of suspicion. So these are the broad compliances as far as practicing unit is required to be complied with under the PMLA. Now coming to the another subject that is the weapons and mass destruction. So actually this weapons and mass destruction and their delivery system prohibition of unlawful activities Act 2005, this act basically came into force with effect from November 17, 2006. And the provisions of this act have effect notwithstanding anything contained therewith contained in any other enactment. So it is having the overriding effect. And and as Mr. Bala in his initial remarks said that this act is applicable to every citizen of India. So naturally it is applicable to whole of India. Even including the exclusive economic zone, it applicable to citizen of India who was residing outside India, any ship, aircrafts, or non-means and other means of transport which are registered or outside India, foreigners while traveling in India, Indian companies and body corporates, including associate out of India, subsidiaries out of India, and branches out of India. So as far as applicability of this act is concerned, it is applicable to all of them. Now, so what happens suddenly that something is there in the system from 2005 and suddenly now we are talking in 2023 after 18 years of enactment of that law. So last year there was an amendment in WDA Act, that is insertion of Section 12. So Section 12 talks about the prohibition on financing related to weapons and mass destruction and their delivery system. And it gives the power to the central government to freeze, seize, or attach the funds or other financial assets or economic resource owned and controlled, whether wholly or jointly, directly or indirectly, by some persons. Now, what is that some person? We will come to a little later. And if it is held by or on behalf or at the direction of such person, and if it is derived or generated from the funds or other assets which is owned or controlled directly or indirectly by that person. So if it is the case, then government has a power to seize or freeze attach the funds or other assets. Also, the central government have the power to prohibit any person from making funds, financial assets, or economic resources or related services for the benefit of the person related to any activity which is prohibited. So all these are the powers assigned to the central government. Now question comes that so in January 23, to be precise, January 30th, 2023, there was an order issued by the Department of Revenue, Ministry of Finance, Government of India. And that order gave the procedure for the implementation of Section 12 of WDA Act. And as per that order, the central government has appointed nodal officers. Now, so various ministries or various functionaries have their own nodal officers under this act, and the Director Financial Intelligence Units, Director FIU, is appointed as the Central Nodal Officer, CNO. And what is the responsibility of CNO to communicate the list of such persons which I mentioned some time back, so that designated persons or the individual or the entities, the central nodal officer required to maintain the list of those designated people. And if any of our clients or customers are falling in this designated list, we have some kind of obligations. Now, under this act, the financial institution, registrar of immovable properties, real estate agent, dealers of precious metals and stones, and others are having some or other kind of obligation. This other includes the registrar of societies of firms, department administrating casinos, Ministry of Corporate Affairs, Registrar of Companies, and other natural legal person. Now, when it comes to the Ministry of Corporate Affairs, then naturally it leads to the ICSI, ICAI, or ICMAI. So when it is ICAI, so it is applicable to practicing chartered accountant. When it comes to the ICAMI, then it is applicable to practicing cost and management accountant. And when it comes to the ICSI, so it is not only applicable to the practicing company secretary, it is also applicable to the employee company secretaries. So I'm repeating, it is not only applicable to the practicing company secretaries, it is also applicable to the employee company secretaries. Now, what are the obligations on the members of ICSI, ICMI, and ICAI with regard to implementation of this? So you need to see whether we are, as a practicing member, holding or managing any asset or resources of designated person. Now, who is that designated person under that list? Issued by or maintained by the central nodal officer. So if any assets or resources of designated person is held or managed by PCS, PCA, or PCMA, right? Or if any designated person approach any PCS, PCA, or PCMA for entering or investing in financial sector or immovable property, if answer of this question, answer of either of these two questions is yes, then as a practicing professional, our responsibility is immediately to inform the nodal officer. Now, who is nodal officer in case of ICSI members is the nodal officer of Ministry of Corporate Affairs. So I'm, for the benefit of all, I'm repeating again that if you are holding, managing any asset or resources of designated person, or any designated person approach you for entering or investing in financial sector or immovable property, then you need to immediately inform the nodal officer of Ministry of Corporate Affairs, right? So this is the first piece, which is the obligation on the practicing members. Now, there is another obligation on the practicing members of all the three institutions. Now, this is more critical. The earlier one is subjective, but this one is critical. Why I'm saying earlier one is subjective, suppose you are not holding or managing any asset or resources, then fine, it is not applicable. And if nobody has approached you for investing or entering in the financial sector or immovable property, this is not applicable to you. But what now I am going to talk is much more critical, that if any PCA, PCS, or PCMA involved in incorporation or formation of any company, LLP, partnership firm, society, trust, or association, right? So if as a practicing person, we are incorporating or forming any company, LLP, partnership firm, society, trust, or association, where any of the designated person is either director, shareholder, member, beneficial owner, settler, trustee, or partner, then we cannot incorporate that company or firm. We have to immediately inform to the nodal officer of Ministry of Corporate Affairs. Now, this is a bit serious compliance which is to be taken care of, where the formation is completely prohibited if any designated person is going to be the director, shareholder, member, beneficial owner, settler, trustee, or partner. So naturally, you have to realign the process of the incorporation of the company, because as per the provisions of the Companies Act, the beneficial owner, which is also defined in Section 90, read with Section 89 explanation, which is giving the definition of beneficial owner under the Companies Act. However, the Weapon and Mass Destruction Act has not provided any particular definition of beneficial owner. So we should not get into into the debate that whether he is SBO as per Companies Act or not. The simple fundamental is that if you know that this is the person who is going to be the beneficial owner of this particular entity, though in as per Section 90, he is not falling in the list of SBO or not, it is immaterial. But if he is beneficial owner, then definitely you cannot incorporate that company. So even the identification of beneficial owner has to be done upfront, right? Though the Companies Act processes says that it is to be done within 30 days, SBOs are required to inform and all those kind of things. But this act doesn't say so. You need to upfront check who is going to be the beneficial owner, member, shareholder, and director. And in case of trustee, settler, and trustees, a trust, settler, and trustees, and in case of LLPs and partnership firm, the partners. So if they are out, any individual is out of this particular list, then you need to inform the Ministry of Corporate Affairs Nodal Office. Now, this was the obligation of the practicing members under this WDM Act. But as I mentioned that what are the, there is some obligations given to the employee company secretaries also. So now there is another interesting aspect which is mentioned under this order dated January 30th, 2023, which says that if you are a company secretary of the company, of any company, but if you are a company secretary by qualification, but not appointed as a designated company secretary, but holding any managerial position in the company, then also it is applicable to you. So if we think that, say, for example, I am a company secretary, but not acting as a company secretary in my company, right? So if I sit and relax and say that this act doesn't apply to me or this order doesn't apply to me, it's wrong, because I am holding the managerial position in the company. So it also becomes applicable to me as well. So what are the obligation of this employee company secretary, whether designated CS or not? You need to do the screening of your director, shareholder, and beneficial owner. And if you find that any of the director, shareholder, and beneficial owner is, out of that designated list, then you need to inform to the nodal officer of Ministry of Corporate Affairs. This is the expectation from the employee company secretaries given under this order dated January 30th, 2023. So it's again a very tricky requirement. The reason being that the companies, specifically the listed companies, may have the large number of shareholder database and all. So their screening is to be done on continuous basis. So that is a very critical requirement which is given, and the responsibility is given to the employee company secretaries, and whether the designated CS or not. So, and if during that, because directors may have the less number, you may have the less number of director, maybe 10, 15, 20, not more than that. You may have the less number of beneficial owners, but the shareholder database may be running in lakhs in case of some of the listed entities, and also naturally those screening is to be done. And in case of any if you find even one person you find, you need to immediately report to the nodal officers, and the responsibility is very clear that you need to inform. Now, once you have informed, your job is done now. And what the nodal officer of the Ministry of Corporate Affairs will do, they will inform to this central nodal officer, that is FIU, and then they will follow their own processes to deal with the matter. Now, coming to one of the important question in this entire process, that the screening part, that when we say designated person, so who are those designated person? So according to my understanding, there are specifically two sovereign lists are to be screened. One is prescribed by the United Nations Central Council as part of their various resolutions. So there are different resolutions. And under all the different resolutions, there are certain mention of certain individuals and the legal entities names and their identification details, their alias, all those are mentioned in that particular list that is to be screened. And another one is that Mr. Bala talk about the UAPA. That is the Ministry of Home Affairs also released. Ministry of Home Affairs have also released some, list of designated individuals and the legal entities with whom. So these two lists are the sovereign lists. Apart from that, if you want to do screening of various other sources which are available, you may do as part of your enhanced due diligence. Say, for example, say Interpol has also their sanction list, European Union also have their sanction list, OFAC has their sanction list. There are multiple sanction lists are available. However, these two are the minimum which I understand that has to be done. And in case of EDD, enhanced due diligence, you need to go beyond even these lists also. So these are the, and then and this screening is to be done on the continuous basis. That is also one of the fundamental requirement that you cannot, once you have done the screening, that's today somebody is not falling in that particular list, but tomorrow he may fall. So you need to do the screening on continuous basis. And the periodicity and everything may be it may depend on case to case basis, but there has to be some kind of continuous screening is to be done. So these are some very important obligations which are given to the which are assigned as and we as a company secretaries, whether practicing or employee, are duty bound to carry out these diligences. Apart from this, I think most of the things with regard to the client due diligence and other things and everything are covered already by both of learned panelists. So I'm not repeating it. So I think that's it from my side as far as PMLA and Weapon and Mass Destruction Act is concerned. Over to you, Mr. Chawla.
Thank you, Anshulji, for dealing with the entire aspect so well. I'm sure members are already benefited by your wisdom. I have already got many questions. I'm wondering how much time we'll have and how many questions we'll be able to cover. But let me start with it without much ado. Manishji, first question to you, if you allow me to pose a question. So this question is from a practicing company secretary who is engaged in incorporation and management of companies and LLPs and buying, selling of business entities. In respect of this professional practice, whether the PCS would be covered by the reporting and definition of reporting entity? Yes. The question is there, so I'm asking you. The answer is yes.
Answer definitely seems yes to me.
Yes.
If I look at both 3rd and 9th May circulars, because I'm trying to put both of them together, not, that is the universe, I think, and within which practicing company secretaries will act. So I definitely think anything to do with the company's directors, shareholders, for the clients, I think broadly will fall under the scope.
Now, what about incorporation? The second limb, Anshulji, of this question is with regard to incorporation outside India. So the question is that there is a help which a PCS is doing for operation with bank accounts and incorporation, but for entities which are outside India.
So my understanding says that, first of all, if I leave aside the law for time being, but if we are aware of that there is something is wrong which is happening, So naturally, we should not become the party to that. And of course, we need to look at the law of that land as well, that what is the provisions over there. If I assume that the similar law will be there, if the country is the part of this FATF and all, so naturally the similar requirement will be there as well. So it will be applicable.
I will just add to what Anshul has said, that if you're doing something overseas, and especially if they are in developed or matured economies, generally the AML legislations there are even more tough. So absolutely go by the smell test and your sense of the situation that you are dealing with, and don't take right decisions and take right actions.
Thank you. Thank you, Manish ji and Anshul ji, for clarifying this. Another practicing member has sent a query that he has recently undertaken an assignment for one of his clients for conversion of ECB into equity shares. Now, and particularly whether this kind of work would be covered, conversion of ECB into equity would be covered under the ambit of these guidelines and the circular. Anshul ji, if you can answer this.
So again, the PMLA is a subject which is more the intent driven rather than the black and white. It's a more principle driven, but I don't think the ECB has its own mechanism which is regulated by Reserve Bank of India, and as per the the entire guidelines which is followed issued by the Reserve Bank of India for the for this conversion of ECBs and all, then I don't think it is applicable. But again, in this, if during the course of this entire process, if we find that all these proceeds of crime are being used in this entire process and all, then definitely it has to be given some different treatment.
Manish ji, anything for you to add?
Yeah, I will just add that in the first notification of 3rd May, the item number 5, which is creation, operation or management of companies. So you are doing a financial transaction in relation to that. Per se, the 5th is quite wide in its scope, even though I acknowledge that it is circumscribed by the fact that it is a financial transaction carried out. Now, in ECB transaction, as you just mentioned, you can say that I'm not doing any financial transaction, I'm only advising. And as Anshul said, and as I'm saying, by my understanding as well, be cautious. Though, unless you really need to take such technical interpretations, and then you should have a sound reason to do so. Try to, if something doesn't seem right, it's probably is not right.
One more clause which I have just read, because I also already being benefited by this webinar. I have this 3rd May circular, even the guidelines. The 3rd clause, Manish ji, there talks about management of bank, savings or securities accounts. Now, I mean, I don't know, because the intent is that this is one, securities accounts. Now, if you see the 2nd clause, it is managing of client money, securities or other assets. Now, if we are managing the client securities, now whether ECB is a client security or not is a question which one will have to answer themselves.
Correct.
Because securities will be defined under SCRA, and then we'll have to go to the SEBI to see the definition, SEBI laws, to see the definition of securities. And what is the intent? Because intent, if we read securities adjacent generis with money, it would mean anything which is monetary, which has monetary value, any instrument which has monetary value, which can be encashed in a monetary form. Yeah. ECB certainly has monetary value. Now, since they are dealing with conversion of ECB into equity shares, they are dealing with securities, because here the clause is managing of securities, client securities. It's too wide. It's too wide. I never thought this way.
And yes, that's what I'm saying. So, I think Anshul mentioned that this is a journey that a lot of company secretaries are going to start now or have just started, and that I think is the right way of describing. There will be many more situations, as people will start reading the guidelines and they will start connecting it with their situations and the transactions they do. And every time, and it is not understanding here and now. ECB is here today. Tomorrow there may be a ADR issue. There may be a foreign security listing in India. There may be a GDR. There may be Mauritius. All kinds of situations. So every day there will be, a requirement to see what mandate I'm getting and what the legislation is saying about some of those transactions and what needs to be done. So I think it's a journey. Need not be frightened or need not be worried about. Start taking steps. But yes, it's a long way to go. And while at it, I'll just use the opportunity to put two insights. PMLA legislation is very old. I remember first time I implemented it was back in 2005 when I was in one of the insurance companies. So talk to other compliance officers of those reporting entities. They have been there, done that. In terms of insights they can give you, whether what is the risk assessment, what do you do in a ECDD and all that. Yes, circumstances could be very specific to yours, this thing, but there could be general principles and guidances which is available in the wider market, and you will have clients which you deal with, especially those financial services. I think that's the perfect go-to place. And this other thing which I wanted to also mention was that when you become a reporting entity, it is possible now that, for example, banks and other financial institutions which deal with you and they are reporting entities, they will start asking you your AML procedures because you are a reporting entity now. And theoretically, by you becoming a reporting entity, the money laundering risk in the overall system is reduced because more entities are doing more checks. So I think that is something. So it is not just you have to comply. That's why you have to do it, but it is also the system which will ask of your compliances, and you have to do it.
Right, Manishji. But one question which has come to my mind now, I'm wondering who all would be covered. In a way, PCS is covered. Yes, PCA is covered, and even practicing cost accountant is covered. But I asked myself, in a transaction like this for an incorporation, now whose certificate, whose digital signature, whose CP number is used is certainly covered. Now people who are assisting him, whether they are also covered. But in this kind of an assignment, if we say for ECB conversion, on a ECB conversion assignment, there may be a practicing company secretary who may be the senior practicing company. There may be 2-3 others.
Yes, absolutely. See, we have seen earlier, there are some of the transactions there or some of the situations where government has, as part of their investigations, so there could be an accountant, there could be an investment banker, there could be an advisor, there could be a cost accountant. All, depends whose all involvement is and who is who all were supposed to discharge who were required to discharge legal obligations. So if you will see, while the circular or notification of third is very specific to 3 professions, the notification of 9th May is not specific to any profession. Whoever does that, in my view, those activities, they all are covered there. So lawyers and others also, I've spoken to one of the lawyers, and he had discussed with me that what is the scope of this and all that. So I think 9th May circular is much more wide in its scope.
One question from my side, because I gave an opinion on this question which we received after 9th of May, but I want to validate and check my view with you, Anshulji. And we can agree to disagree, that's okay, but I'll share my opinion later. The question is simple, that a practicing company secretary may become a non-executive director on the board, executive or non-executive independent director on the board of a company, provide a nominee director services, provide a nominee shareholder services when there is a public company which is wholly owned by a foreign company, and obviously requirement of 7 shareholders are there. The foreign company has only one company entity and 6 more nominees are required, and they are not comfortable to have employees because they keep changing. So they prefer consultants, professionals like you and me to become the nominee shareholder. Whether they, in that case, if the services are being provided, would be covered in the reporting entity framework?
I think the circular talks about it, and they are covered. But one thing we need to understand that PMLA is not asking you to not to do this thing. PMLA is saying that during the course of these services, if you find something suspicious, report it. Right. So it is not saying that you don't do this. So naturally, I think there is nothing is prohibited. But yes, if you find something suspicious, you need to report. That is what my understanding is. Manishji, if you can share some more light on this.
No, absolutely. I think those are exactly the words I would have said as well, that nothing is being prohibited and nothing being stopped. The life, technically, what you lived yesterday continues to be lived today and tomorrow as well. The idea is that within that, whatever you are doing, if there is a hanky-panky issue, if there is something which doesn't add up, if there is something which can't be explained, or is a clear criminal action or money laundering, or you're just trying to, be smart, that is not on, and that is what needs to be reported. So, and as a director, then you will have your directorial responsibilities and duties as well. So if there is something wrong, then it adds to that under that this thing. And if that company happens to be a reporting entity, there is another angle to it as well, because that company also needs to consider its own transactions and its own actions. But having said that, companies with no apparent objective just being created, companies not clear about why they are being created or what is the objective, nominee directors, nominee shareholders, these are, in my view, would be higher risk situations where you need to ask more questions or understand situation better.
Right. So our opinion was same, because we gave the opinion that prevention is better than cure, reporting is better than non-reporting, and tomorrow being questioned, because we read the reporting requirement was not draconian at all.
Yeah, you said that word absolutely perfectly, because it is about preventing of money laundering. So all your actions are about preventing that situation.
Correct. Anshulji, one PCS is asking that their client is in business of manufacturing of motor vehicle parts. Motor vehicle parts. Yes. Whether a WMD is applicable to them.
They are into the business of motor vehicle part. WMD is applicable so naturally WMD is applicable to everyone. There is no doubt on that. Now, as far as company is concerned, company needs to do the screening of their, as I said, the director, shareholder and all. And if they find that any of the persons are falling under the designated list, then they need to report. WMD is nothing to do with the object as far as PCS has given the responsibility, as I mentioned, that two responsibilities which are subjective in nature. One is with regard to the incorporation of companies or formation of companies, LLPs, etc. And third one is to the employee company secretary. If you are falling in any of these, then it is applicable. But saying that it is not applicable, it's incorrect. It is applicable. You have to do the screening. Once you do the screening and find anybody is falling under the list, report to the nodal officer.
Right. One interesting question has come up. Whether members who are bound by the engagement agreement with the client, and the engagement agreement generally would have confidentiality clause, whether they are bound by that in terms of PMLA reporting, because they are otherwise not supposed to share the confidential information. So if they try to do a reporting here, they would be in breach of the contractual obligation there.
I think the engagement letters also needs to be seen that in case of any statutory obligations. So naturally, the terms of engagement, the legislation will supersede the terms of engagement. That is what my understanding is. Because tomorrow, suppose some investigating authorities or maybe the court ask for certain information. So I cannot go and plea that I am bound by this confidential agreement. I have to abide by the orders of the legislation. So this is what my understanding is.
I agree with you, Anshulji. While I asked you this question, I immediately went to WhatsApp because I sent a proposal to a client yesterday to see what clause we have. So what we have done is that we have said that unless required by any statutory or regulatory authority.
Absolutely.
So we'll maintain the confidentiality unless required by any statutory or regulatory authority. So this is a statutory requirement.
Yes.
Yeah. You will generally have that clause or a construct in most of your or in all the documents.
So the takeaway, correct, Manishji.
But my view would be, assuming just for a moment, even if it is not there, a contract cannot ever be held hostage to a regulation, so to say. So regulation will always supersede it, and not only that, you have to, if it is a situation where you have to report, and irrespective of what is written in the contract. And you also not have to tip off the client. That is extremely important. The tipping off mantra should be absolutely kept in mind. The only actually one situation is, and I don't have an answer, but I'll put it as a thought, is if you have a lawyer and client fiduciary relationship, because that is afforded a certain legal privilege. I don't know exactly what the right answer would be, that whether or not that is also something which can be overridden, but that's the only one situation where this can be considered, whether is it still something reportable or not. But practicing company secretaries don't have that privilege, so that question doesn't arise.
Right. One question we have received with regard to the lawyers, that they are kept out of the notification, and the PCSs are, and PCA and PwC practicing members are included in that. Now, what's the intent? As you have mentioned, Manishji, the intent seems to be covering, because we are primarily into this activities which are mentioned here. Now, if the intent is to get the coverage done, then instead of only binding these three professionals, why do you feel that why ministry has not included any other professional, not even other lawyers, any other professional, whoever is involved? May it be an MBA.
The only thing I can think of is, or I can point out to, is that go to FATF guidelines, read those recommendations 22, 23 particularly, which talks about these professions and what are the risks arising in relation to these professions, and what controls and what requirements should be followed. So probably that will answer. Otherwise, honestly, it will be really not. I won't be able to answer that why XYZ also should not have been included. That's something which Finance Ministry or FIU may be in a better position to clarify.
Right. So one question, Anshulji, has come, which seems to be a very typical question from the reading of the question, typical from the PMLA Act, which is that in practice it is generally seen that the designated director relies totally on principal officer and thinks that his role or responsibility shall be taken care of by the principal officer. If so, why is there a separate provision of designated director under PMLA Act? And apart from there being principal officer, what is the need of these two different designations under the Act?
I think Manishji can answer this better than me. But just if we start looking at the legislation structure like that, so tomorrow anybody will come that why the company needs director when other CFOs and CEOs are there. So why I need this, I need that. So of course, it's a framework of the law that the people who are made responsible under the for the particular for the implementation of the entire legislation. Manish, if you can share some more thoughts on that.
Similar thoughts. I can't really answer why there is a two-level supervision prescribed for reporting entities. It is what it is, and we have to follow what it is. By my experience, different countries have different way of, while FATF guidelines are overall like the mother guidelines, but there are tweaks and changes that countries are free to do in whatever wisdom the FIU and the government has decided that's the way we want it. We want a higher level responsibility and we want a operating level responsibility. So that's the way it is.
So it's more principle and procedural. So principles are with the designated director and procedures are with principal officer. That's the way I look at it.
Perfect. I think we have come to the end of our today's webinar, which was certainly enlightening for many of us, around 5,000 of the members who have joined Manishji. I'm sure 5,000 would be a huge number, but otherwise, generally when we do programs on topics which are more centric to our profession and professionals, we have double audience than this, 10,000 generally, 10, 12, 15,000. This offbeat topic has gotten this much audience, credit to the audience and to the panelists and the speakers, honestly. Because I say why offbeat? Because unless you are trapped and stuck, and unless you know the real implication of this, till then people would say Sanuki. In Punjabi, they say, oh, PMLA Sanuki. And when we get stuck in this, and when somebody is caught, then we say Twanuki. Tumhe kya? So that's the reason why, Deepaji, the number is maybe low from what we generally have, but 5,000 in my view, around 5,000 is not bad. And Manishji, the way you explained in a simplistic term, certainly Anshulji did a great job because he had to come on number 3 after Rohit Sharma and Virat Kohli both have played their innings so well. I was wondering what he would do. But again, with his experience and clarity in his mind, he has shared his views, and particularly under the WMD Act also. So friends, now on behalf of the Institute, again, I would thank Anshulji and Manishji for sparing their valuable time. Thank you, Manishji. Thank you, Anshulji. I have one request to all our participants who did join us today in our webinar. We have another webinar day after tomorrow. We have our national convention happening in Varanasi this time on 2nd, 3rd, 4th of November. But we have another webinar day after tomorrow, which is again on a different topic, which is on opportunities, which is CS overseas opportunities, particularly in Australia, which would be led by Manishji and our 3 members in Australia who are residents of Australia, but are members of the Institute and also members of the Australian Institute. So that would again be an interesting subject to know what are the opportunities, challenges also. In fact, the way I see opportunities and challenges come together. We cannot segregate opportunities from the challenges. So as of now, till we meet again day after tomorrow, thank you from our side. Thank you, Manishji. Thank you, Anshulji, for sparing your valuable time. Thank you, Deepaji, for navigating this webinar. Thank you all the participants for joining today. Thank you, Anusha, for briefing me, for being my guide, for taking me through these provisions. Thank you, everyone. Thanks a ton.
Thank you. Thank you so much. Thanks to ICSA for the opportunity, and thanks to all the members. I can't see them, but I'm sure they hopefully they had a productive time.
Absolutely. On behalf of the members, I say so. Thank you.
Thank you.
Thank you.